Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Tuesday, the 28th of September. Right now, we're starting to get things lined up. Weekends come and gone. The markets have reconnected. The US equity markets, the yields, I should say, continue to climb, right? And we're starting to get a bit of uniformity. When the Treasury yields climb, it's perceived, well, it's actually a real thing. The interest rates are high. I was going to say perceived future interest rates will be going up. That should put downward pressure on equity markets, which it is. And we're really still not seeing the major ripple on effect, but we are starting to see the dollar climb against a number of pairs. Now, there are a few odd things happening, like dollar CAD, for instance, oil up at 75.5 bucks a barrel, putting really strong bid tone under the CAD. So dollar CAD is falling. But let me just show you across the board here, because once we start, and this is, don't forget, this is the last week of the month where we do have a lot of central bankers talking, all the major data is on the table. We're starting to get the markets moving towards the next major event, which is Friday week's non-farm payrolls, right? So that's the major focus. We've got a week and a half or 2 weeks to get there, and we could start to see the dollar start to trend as it should with that steady rise in the US Treasury yields. So just having a look here across the board, Euro to me is the best trending pair. It's done a lot of work along this trend line. It's solid as a rock. The market at some stage during this week, whether it's today or Wednesday, will come back and challenge that trend line and have another look at it, right? Once these trends start to form, the initial momentum starts to fade, it challenges the trend line, fails, and then goes again. So that's the general run of how these short-term trends work. Now, outside of that, there's other external issues impacting, which I'm surprised sterling hasn't fallen yet, but Aussie, sterling, and, well, I've got to say Kiwi is down in the doldrums, although it's not, it had a bit of a clean out to the top side, right? And then now it's sort of just trading sideways. These three pairs here, I'm surprised the dollar isn't doing a bit more against those. There are a few sort of external events. If you're looking at the news, sterling's got a massive shortage of oil. And that's going to be very disruptive to the UK economy. That's why I'm surprised sterling hasn't fallen yet. Now, I had, the Bank of England did come out with, brought forward their forward guidance and all that sort of stuff. That's a positive, but this should offset it. But it's a little bit confusing just at the moment why these pairs aren't rolling over a bit more. Dollar CAD, well, it's between a rock and a hard place. Oil at 75 bucks. Clearly, oil is in control of the funds, or the Canadian dollar as it's known. That Evergrande, all the pressure from that was receding, so the yen safe haven has been fully unwound. You've got the dollar index steadily rising, and if I widen out dollar Swiss, it'll look very similar to the dollar index. But you know what? It really isn't going mental. So what we're seeing is not really the emergence, the continuation of the strong dollar against a couple of, against a couple of pairs. Well, the dollar index is going up against dollar Swiss, dollar yen, but these are unwinding of a bit of a safe haven. Euro's going down. So that's where the dollar is very clear what's going on, and it matches up with what's going on in the treasuries. That's why I like that structure. Dollar CAD is going down, I think more so because of the increased spike in oil, which looks like it's going to continue, especially if the UK are running out of oil. And then you've got on the sidelines, these other pairs, which are just trading sideways at the moment with no real clear indication of, are they going to start falling yet, rallying, all this sort of stuff. So to me, you've got to focus on what makes the most sense, right? Euro, obviously the dollar index, dollar CAD, as much as I know it makes sense, it is an external factor like oil that is in control. So you can actually, I'll be watching and trading oil very closely. It is having a major impact on the CAD. Right, so that's where we are. That's where we are to start the week. Now, when you come back and have a look at that, the hourly charts, and you look across the board, you're trying to work out what's going on with the treasuries. Okay, they're edging up. Equities are coming off. Now's the time to really come back and focus and actually take a closer look at the daily charts, because this is where you can get a bit more detail, right? As you can see, Euro here, just breaking down to the downside. It hasn't broken through that previous low, but it has broken down through support. You've got sterling, which broke down previously, has come back and retested that trend line. Now, it's probably be drawing a trend line. Let me just get this in here. Okay, if I just blow that up. Across, this is where you get to use a bit of common sense with your technical analysis. And there is a trend line from here, sort of across to here. Probably go to that recent low. Right now, I would be just changing that color on that, just so I know what I'm looking at. Orange isn't the best. Let's go. That's too close to the other one. Let's go a dark blue, eh? Right. So what I'm looking for here is, okay, so it's broken down. Maybe this short-term trend line, which is, well, not short-term, it's going back, when is that? July, 26th of July. That could be the real trigger for the next big drop in sterling below that. Okay, it's got 3 touches. It looks very good, very compelling. So I'll be keeping a close eye on that trend line. The Aussie, well, it's bounced back into the range. We've got so it's sort of still tracking overall down, but we aren't getting that drive lower as well. It's like the Kiwi, yeah, sure, it's overall down, but it's trading sideways. We've got support and resistance trend lines to work with. Dollar CAD is one of the key ones here. Check out Dollar CAD. It's about to break down through a daily trend line. And I'm telling you, if the UK is running out of oil, this is going to be happening across the globe, you know, with shortages on the pandemic, shifts in the demographics of the workforce, etc. That could be a big play there as well. Now, and then obviously the dollar index wants to go, but it just doesn't have, no one's seems to be overly confident yet that it's going to start, the dollar's going to continue to run. And I think this is because what we're looking for is maximum employment in the US, right? And that's, as I said, that's 2 Fridays away. And the Federal Reserve haven't really told us what their maximum employment number is. So it's a bit of a mystery number. The fact is, if the non-farm payrolls are strong Friday week, well, then the dollar's going to be gone, right? But we have to sort of wait and sort of feel it out as it goes. So we've got the start of the dollar move on the overall on the daily charts. So focus on it once again, focus on the pairs that make sense, that fit the picture, right? In the meantime, what you've got to do is try and come back together, piece together, keep an eye on the breaking news, okay? And then you can start to see, have a bit of a look around, see what else is going on. There was, I just noticed here a short while ago, North Korea launched a single missile, possibly low, that it landed in Japan's EEZ. Okay, now that's a developing story. When we haven't seen North Korea causing trouble for some time, that's something we better keep a close eye on if it's a real event or not, right? So now outside of that, what are you going to look for today? So looking at the market, okay, I'll be keeping a close eye on Aussie retail sales. That could give the Aussie market a little spark. I'd say retail sales, it's got to be all online because most of the places locked down. Then you're coming down to looking at US consumer confidence, right? Bit of a early look into some US numbers may give us that little push to the top side that we're looking for, or may take a little bit of heat off the treasuries. Now, if consumer confidence is strong, you would expect these treasury yields to continue to rally, right? And that would put further downward pressure on the equity markets. And you would expect the dollar pairs to rally, right? Euro, sterling, Aussie, Kiwi, the dollar block to fall, and vice versa if those numbers are weak. That's probably your major focus coming into today's trading. There's not much else. You don't want to look too far in front. Don't forget, we do have a number of central bankers talking. So if you do have your news service up, go through and check out who's talking and when, right? We've got some of the big heavy hitters, Christine Lagarde, the ECB president, Jerome Powell's due, the Bank of England policymaker, Catherine Mann. There's a whole bunch of them, right? So just be careful that we could see some left field activity off the back of these central bankers talking. And that's pretty much it, guys. There's plenty going on. We've got the build up of moves. I'm super not confident with a number of pairs. Euro to me is the main attraction. Dollar CAD, I really like the idea of that, especially because we can see a tangible influence like oil driving it lower, right? So if oil turns around, for instance, then it starts falling, well, then you've got to see dollar CAD rally. It's an easy one to pick off if you are, particularly in that North American session, right? That's where most of these movements are emanating from. All right, guys, all the best. And yeah, good luck with your trading. Try and follow the market. Let it guide to you where the main opportunities are. Actually, one other thing, just keep an eye on that GfK consumer sentiment numbers out of Germany. A good historical number there that may give the euro a little kick in the belly should those numbers come out weak. All right, guys, have a good one. Cheerio.